All right, let's take a look at Robinhood's new feature, IPO Access. So this was announced on their blog just a few days ago, and IPO Access is a new feature with Robinhood's trading app that allows us, retail investors, to invest directly in IPOs. This is super crazy and super awesome because forever we have not been able to get access to that actual IPO price. Say, for instance, your favorite tech company goes public, like say when Airbnb went public or Uber or Facebook goes public. They had a certain price that they came out at that all the big institutions got to buy at, but you didn't. The only way you could buy it was when it was traded on the open market and the price had already popped big time. So this is a really great advancement. I think something great Robinhood is doing to truly democratize finance, which is one of their mottos. So in this video, we're going to keep going through more of the aspects that they announced regarding this new feature, but also some limitations, I think, that really are going to be big headwinds to make this feature truly viable at scale. So if you're excited about investing in IPOs at the same price that Wall Street is, then go ahead, smash that like button, because it's going to allow this video to be shown to more people like us who want to have a chance at building wealth the same way the big guys do. So go ahead and smash that like button and let's get started. All right, let's take a look at the actual product announcement on Robinhood's blog. Today, we're starting to roll out IPO Access, a new product that would give you the opportunity to buy shares of companies at their IPO price before trading on public exchanges. With IPO Access, you can now participate in upcoming IPOs with no account minimums. Most IPO shares typically go to institutions or wealthier investors. With IPO Access, everyday investors at Robinhood will have the chance to get in at the IPO price. So this is really, really exciting, because as this blog just said, most IPO allocations go to wealthier investors or big investment institutions. The investment banks that are known as the underwriters that are running these IPOs, they have clients that are very high dollar customers of theirs for other types of work, M&A transaction, corporate bond sales, in their own IPOs, and maybe they have portfolio companies. So wealth management if they're a wealthy individual. So all of these things, they want to make them feel like they're being treated the best by giving them allocations of these really awesome companies that pop on their first day of going public. And so it leaves no additional shares available for retail type investors to get in on. And what that really means is, even if you're part of another brokerage like TD Ameritrade or E-Trade or Charles Schwab, as a retail investor, I've seen the emails come through from my TD Ameritrade account, and it's been no company that most people are interested in investing in on the IPO price, and they're thinking that it'll have a big pop on the first day of trading. The Airbnbs, the Snowflakes, Affirm, all those companies that really ripped on the first few days of trading, all those shares, all that allocation went to big investors. It all got eaten up, and there was nothing left for the little guy. So this is super interesting. The intention's great. Also, the fact that there's no account minimum required, even if those IPO allocations have something left over for the little guy and they make it to a TD Ameritrade or an E-Trade, those investors still have to have high account balances or very high trading activity in order to get in on them. So basically just saying, you discover upcoming IPOs from a list of participating companies that plan to distribute shares to Robinhood. And you can follow those companies and stay up to date on all their milestones. Okay, got that part. Then you can request to buy shares of those companies at their initial listing price range. When the final price is set, you'll be able to review, edit, or cancel your request before shares are allocated to Robinhood customers. That's because when a company's going public, there's always a little bit of last-minute adjustments on the valuation and the number a dollar per share that is going to be offered. And then sometimes there's price discovery right after that from the retail market. And then after you put in your order of how many shares you want, you watch and you wait. IPO shares can be very limited, but all Robinhood customers get an equal shot at shares regardless of order size or account value. That's awesome, and they're going to treat everyone the same based on the fact that they're a Robinhood customer and not based on the number of dollars in their account. So the allocation process, I'm actually very concerned for Robinhood on this new feature, because the ability for them to get shares in the hottest IPOs that everyone wants is the key thing that's going to make all of this work. And if they don't get those allocations or a good number of shares to the hottest IPOs, it's almost as if this feature does not matter. For instance, I've been a customer of TD Ameritrade many years, and I've seen the emails come through of what IPOs are participating in, but most of them are not the big ones that you would expect that most people would want to get into. There's no Airbnbs, no Snowflake, nothing. All those stuff that popped and just ripped that first day, none of that came through most retail brokerages. Why? Because the big institutional investors that have the relationships with the investment banks, also known as the underwriters, they're the ones that get the allocations. They're pension funds, mutual funds, hedge funds, wealthy individuals. And so Goldman Sachs, Morgan Stanley, JP Morgan, Bank of America, when they are the lead underwriter on an IPO for a company trying to go public, they have all those relationships and they want to give the access, the ability to buy at the IPO price of these awesome companies to their best clients so that they can make money, so they remember them when they need services. Maybe they want to take a portfolio company public, or they want to raise debt or do some type of M&A analysis and transaction work. It's more of a, you treat your best customers the best, and letting in the retail. Like, what is Goldman Sachs going to get by giving Robinhood a slice of shares in their next hottest IPOs for the retail to invest? And that's one of my other concerns, is that what is the pound of flesh that Robinhood is going to have to give up to get this type of access on a regular basis from these bulge bracket investment banks? And so the investment banks or the underwriters, they actually prefer not to allocate shares to retail investors on an IPO, not only because it's less shares to make their uber wealthy clients happy, but it's because typically retail investors have a pattern of just selling the shares either the day of, or maybe the day after they buy into an IPO, especially these IPOs that just absolutely rip. So they like selling to the institutions because they buy and hold, because they typically aren't as free and flexible with their trading. So one thing that Robinhood is doing, I think, to make the institutions feel better, they have a flipping policy. We won't prevent you from selling shares you get through the IPO Access program. However, if you sell IPO shares within 30 days of the IPO, it's considered flipping, and you'll be restricted from participating in IPOs for 60 days. Issuing companies and their underwriters often try to avoid IPO stock flipping. Flipping could lead us to offering fewer IPOs in the future. So basically the idea is that if all their retail traders, the retail customer base of Robinhood jumps into this program right away, and the first few companies that they participate in, they just sell them the first 30 days, first few days, it could literally ruin the program for everybody. So they have to impose a limitation, sort of an economic disincentive like this, so people actually hold, because they're worried about the mass volume of retail traders coming in and tanking the stock price, I guess. And it's interesting, is this because of the GameStop fiasco? Are they worried about a coordinated effort to drive the price of an IPO? Have we retail investors really garnered that much power that the big institutions are worried about us? It's kind of a discussion for another time, but the more immediate concern is, will Robinhood be able to get a consistent number of hot IPOs onto this program? And then if they're in it, will they even be able to get a meaningful number of shares such that a good portion of their customer base can even participate? So those are my thoughts on the new program by Robinhood called IPO Access. I hope they get all the big allocations of the awesome IPOs that are coming our way. And I think it's going to be a really great opportunity for us if we can actually get in. So go ahead and smash that like button and make sure to show this video to everybody so they know that they have an opportunity now to get in at the same price Wall Street does. I'll see you next time.